The ninth stock I ever bought was CryoCath Technologies. They were a microcap medical devices company. It traded on the TSX in Toronto. My cousin worked in investor relations, and his company had their account. He didn't have any insider info, but he told me they seemed like a good company, and to me, I thought I was Gordon Gekko getting a hot tip. I didn't 100% understand what they did, but I knew it was something to do with hearts. And I'd recently read Boom, Bust, and Echo. If you haven't read it, it's a lot about how demographics is destiny and how the boomers were affecting the economy. And so I figured I should be investing based on what baby boomers were going to need as they aged. CryoCath played right into this as well. And they did that a lot in their communications. They indicated a huge total addressable market, also known as TAM. They talked a lot about how aging baby boomers would be using their services. So I bought 200 shares at $4.35 a share. It was January 26, 2001. We are here today with Patrick Reyes. He's the founder and CEO of Matterhorn Labs. Now, Patrick, you're a Lebanese Armenian living in Switzerland. So why don't we start with that? Did your family flee the Shah in Iran? Is that right?
Absolutely, that is correct. So I was actually born in Iran, in Tehran, and we left shortly after the revolution because my family is actually Greek Orthodox. So, from a
Yeah.
religious perspective and also from a political perspective, our beliefs didn't really align with what was going on in the country. So we decided to leave, went to Lebanon. My father's Lebanese. And unfortunately, at Lebanon in the time, in the late 70s, early 80s, was the Civil War. So we had yet another challenge to deal with. But essentially, my journey kind of went across Europe, is where I was born and raised and studied. Eventually went to university in North America and now came back to Europe. So I'm based here in Switzerland. So that's long story short.
And your elementary and high school, all that you did in various places in Europe?
In Europe, correct. Yes.
Sounds like a fascinating upbringing. And then you went to UC Santa Barbara, is that right?
That is correct. That's where I went to do my university studies. That's my alma mater. And I studied computer science, specializing in software architecture, ethical engineering, and relational databases, and then eventually transitioned into my career in tech during the internet bubble.
So was the plan programming? And what exactly is ethical engineering?
Yeah, so ethical engineering is basically during the course, we studied a particular case that happened in the history of the space program with NASA, which is the Challenger mission,
Right.
and how the O-rings failed and all that. And we did a deep dive analysis into it and understood how, from an engineering perspective, there's a lot of ethical topics that can be addressed, particularly for ensuring as an engineer that you build things that societies and civilizations use that can adhere to certain safety standards, certain levels of quality, and so forth. So I think that course was pivotal in helping me be successful in tech because I really focus on high quality of deliverables, high quality of work. I really look at the details because, as you know, with tech, every moving part to the tiniest cog counts. Otherwise, things break. I started as a developer, so I wrote code. I started with JavaScript, with Java, C++. Moved on to Cold Fusion and HTML, which was used quite heavily during the internet bubble to build websites. And then I went into architecture, transitioned into that for my career. So I was a solution architect and a technical architect. So basically designing landscapes for enterprises, systems, interfaces, hardware platforms, and so forth. And then eventually I found my passion, which was project and program management. So I wrote a book about that. And that's kind of where I am right now in my tech career. But of course, I'm doing other commercial stuff on the side, which you mentioned earlier, which was my company.
And for listeners, what's the name of the book?
So the book is called 100 Project Manager Insider Tips. It's on Amazon Kindle, and I published that about a year and a half ago. And the reason I wrote it, and I would say the value of that book is people do certifications and trainings on project management, like project management professionals, the PMP certification. They do scaled agile for safe project management and methodologies. But one thing that always seems to be missing is the human element of project management. So how to communicate with people, how to celebrate events of a project and really empower and give your team interest and value to continue driving forward, how to focus on quality of deliverables and so forth. So I compiled all of these learnings in my career over the past 15 years that I've been doing project management, things I've learned from different projects into 100 tips, put it in one book and published it.
You've had quite an interesting career path as well. It looks like you've been at UBS, Nestle, Philip Morris. Now, did you get any stock options or were you investing in any of those companies when you were working there?
No, well, I was a contractor for a lot of those engagements. So they were for approximately 2 to 3 year periods, but I didn't invest in the companies directly due to conflict of interest. It was in my contract. So I could only wait until after I had left the company to be able to invest in them. So Nestle is actually one of the companies in my portfolio. Lightly invested in them. I'm looking forward to invest more heavily in them and more aggressively because they're really, as in terms of a fast moving consumer goods company, they are really at the top and they keep buying other companies. You go to a grocery store, you pretty much see Nestle all over the place. So
And they're based in Switzerland, right?
they are, yes. And I had the luxury of working at their headquarters, which was absolutely amazing. It's almost like a paradise. It's right by the lake. The lake is called Lac Le Mans in French, which people in English, they call it Lake Geneva. But you just have a view to the lake while you're doing your work, while you're having your lunch. It's an unreal place. Plus the people were spectacular there. Amazing people to work with. Yeah.
But it's not like a Willy Wonka factory or anything. They're not actually making chocolate at the headquarters there?
No, they're not. But I had the luxury of visiting the Nespresso factory, which they purchased a few years back after I joined for the coffee capsules. And I saw how they're manufactured, and it was a delightful experience. But since you mentioned Willy Wonka, in Switzerland, in Zurich, we have a place called the Lindt House of Chocolate. So Lindt is Lindt, which is a chocolate company here in Switzerland. And that is the closest Willy Wonka factory we have in the world. I mean, they've got chocolate dripping from the walls. You get to build your own chocolate and your own. It's a magical place.
I'll have to check that out if I'm ever in Switzerland. So you weren't looking for a career in finance.
I wasn't actually. And talking about finance, how I got started in that was two areas, really, or three. One of them being my father, who was a banker, my stepfather, who was in cosmetics, but an aggressive investor in the stock market. And third was a close friend of mine who recommended I study and get certified as a chartered financial analyst, which I didn't do in the end. I just studied for it, but I never took the exam. So these 3 points kind of influenced me to get into finance and investing.
Well, I wrote and passed the CFA exams. I felt like there was a lot of good info there, but there's also whole chapters on how to properly use the title. So I can't officially call myself a CFA charter holder. I can only say that I've passed the exams. So was your friend doing the CFA exams and he wanted you to be his study partner? What happened there?
Yeah, he did. Plus, we were going to start a company together, a company providing educational services. It didn't work out in the end. Unfortunately, we couldn't find investors and so forth. So, but he studied for the CFA, he got certified. And the reason he pushed me to do it is because he believed if I combined my technology experience with finance, it could be a powerful thing on my resume, which I think he had a point because as I embarked in my journey through technology, I actually ended up supporting the finance divisions of companies for my technology projects because I work with SAP, which is a competitor to Oracle here in Europe. And SAP is an ERP system for enterprise resource planning. And I was particularly focused in finance. I probably should have done the CFA. I think it would have added great value to my career.
Well, it sounds like you're doing just fine without it. Switzerland now, it's kind of the perfect place to be a currency trader, right?
Yeah, it is quite good. From a time zone perspective, it's particularly good for the Euro USD currency pair, which is the currency major out there for Forex traders. And I actually started in Forex when I was in North America because I wanted to do trading, high leverage trading. And at the time, there was a broker that offered, I think, 1 to 10 leveraging on margin, which was quite aggressive at the time. But I actually started my investing and trading career with stocks, thanks to my dad and my stepfather as well, who influenced me to get into it.
Let's hear about the first stock you ever bought.
Okay. So the first one I ever bought at the time was many, many years ago, and that would have been Cisco.
What year are we talking?
That was such a long time ago. Probably, yeah, during the internet bubble, roughly, right before it burst. But I wanted to get into Cisco because a lot of tech companies at the time, internet companies, were really hot and the stocks were just going crazy. So my father was in banking, so he gave me a good perspective and context on stock investing from a banker's perspective, which was highly valuable for me to think about long-term investing. But my stepfather also got me into the concept of trading stocks. So I saw an opportunity with the internet bubble, and I found a broker that allowed me to buy and sell on margin. So I took some risk with my salary at the time, and long story short, and we can get into the details, but I actually managed to double my portfolio balance within, I would say, about a 6 to 8 month period. But then when the internet bubble burst and everything just crashed, that's when I lost my shirt because I really didn't master shorting. I tried to figure it out. I understood the concept, but it just didn't work out for me. So I lost half of my portfolio back to my original balance, and I decided to get out of it and look into Forex.
So you broke even?
Yeah, I ended up even. Yeah.
I'd say that's pretty good. When I heard you say leverage, Cisco, and internet bubble, I thought this is not going to end well. I think they were the biggest company of all time during the internet bubble, weren't they? I think they had the largest market cap ever at the time.
They did. Plus, the volume was really high and the movement of the price was quite fluid and smooth. So there was always an opportunity to get in and out of the stock during trading hours. So that's why I chose it. There were a lot of other stocks that I made most of my money out of. There was one in particular that was in real estate called Hovanesian, HOV, I think was the ticker symbol. And I made most of my money. I would say about 50% of my money, I made it out of that one particular stock. I don't know if they're still around. I think they were a small to mid-cap company.
So your first one was Cisco, which is a pretty good stock to have as your first choice, especially during that time. And was this a recommendation from your stepfather? You seem to have had two kinds of influences there. You had the banker buy and hold type mentality from your dad, and then sort of a trader perspective from your stepdad. Is that right?
Yes, it partly was. He suggested that I get into some of the more popular stocks during the internet bubble, and Cisco was one of them, so he pointed me in that direction. But another thing that influenced me quite a bit was my stepfather was a member and a subscriber to a financial newsletter at the time. And back then, when we didn't have Motley Fool, when we didn't have Seeking Alpha, the financial newsletters were a hot topic in PDF format or an email format you get in your inbox. And one of them in particular came from Switzerland from a guy called Harry D. Schultz. And he was a very successful stock trader and investor. And his newsletter actually had some excellent stock tips. So I would say probably 30 to 40% of the trades I made were based out of his newsletter, which allowed me to get to that target of doubling my portfolio. But then I kind of lost track and I said, you know what, I'm going to do it my own way. And I did. And everything just kind of blew up in my face. I didn't listen to the pros, big, huge mistakes.
All right. So then what would have been your worst trade?
So my worst trade, and I can't remember the company, but I joined a chat group, which was paid for. With a guy in New Jersey who had a strategy to trade a stock based on retracements. So he would wait until there was a big move up or a big move down, and he would either buy or short the retracement of that price. So I said, you know what, this sounds like an excellent idea. So there was one particular stock he focused on. I honestly can't remember the name. It started with an A, but it was such a long time ago. I mean, this was during the bubble, right before it. I followed everything he recommended. And I made a little bit of money in the beginning, but after a couple of months or 3 months, it just didn't work out. And then I left the chat group. And then a year later, I decided to check in on them to see if they're still around, and they disappeared. So lots of mistakes.
You weren't actually shorting though with this guy.
I was doing both. I was buying and selling.
And so did you lose your shirt shorting or what?
Yeah, that's where I lost most of my money actually because of the shorting. I could not master it. Things were going down way too fast, way too quickly, and it just kind of blew up in my face. I mean, I couldn't figure it out. So now in hindsight is 2020, you know how they say that. I think what I would have done if I had known better is I probably would have stuck to my father's advice, which is to buy and hold, in combination with following the trading advice from that newsletter from the guy in Switzerland who actually recently passed away a few years ago, I think, and now he no longer has it, but he had excellent tips. I don't know where he got them from, but man, they were great.
So who ended up doing better financially, your dad or your stepdad? Maybe you shouldn't say. Maybe that's not a good question.
That's all right. Well, sadly, they both passed
Oh.
away. Bless them. They were great men in my life who were pivotal in my career, in my education, and giving me a life. But my stepfather ended up winning that game, let's say, because my father, who was a banker, he eventually got into building timber frame housing in Lebanon, and the market for that was quite thin. So he wasn't very successful in that. He spent, I would say, 2 decades working on that, and he built many homes in Lebanon. But because of the economic and political situation there, he just wasn't able to succeed financially. And my mother and my grandmother from my mother's side always used to tell him, you should have stayed in banking. You got to listen to the wife sometimes, or all the time, probably.
Yes, absolutely.
But that's the story between the two of them.
All right. What would you say then was your best investment ever?
Best investment ever, Apple. Apple. I started investing in Apple, I would say, about 4 or 5 years ago. And so far, it has been my best performing investment. These days, I do two things. I'm invested in 4 or 5 different NASDAQ stocks, Apple and Google and Nvidia, Microsoft. Those are kind of my big focus areas because after I broke even and I didn't succeed in trading and investing during the internet bubble, I actually read a lot of books. I started following Berkshire Hathaway, reading their newsletters, reading their financial statements, following Buffett's way of investing to buy and hold. So I changed my perspective with stocks completely and realized that it's not really a playground, let's say, to trade. It doesn't have that kind of movement you need. It just generally goes up. I mean, if you zoom out and look at a chart for the NASDAQ or the Dow Jones or the S&P for a 10, 20-year horizon, I mean, it just generally goes up. So it's a buy and hold mentality. And I tried my best to start as quickly as I could with my wife, and we're invested in NASDAQ stocks primarily. And then the second thing I do is the Forex trading on the side with a small portfolio. I've come close to mastering it, but the US tariffs and the US government shutdown have thrown things out of whack.
Well,
So now I'm trying to figure that out.
yeah, I'm sure there's people that are benefiting from all this. I don't know, maybe I shouldn't say this, but I would guess there's people that are closer to the administration that are making piles of money because if you know what he's going to tweet, like, I mean, there's all sorts of strategies like the taco trade, right? But with Trump, I don't know. If you were an outsider looking in and said, if I was a president trying to manipulate the stock market, how would I behave? I think it would look pretty much like what he's been doing. So you watch and you say, okay, well, the market tanked based on his comments. Well, now he's going to make some comment that's going to allow it to recover. At least that's the way it seems right now. Give it around 3 days and it's going to recover because It seems like he sees the stock market kind of as a scorecard for his presidency, or he likes to see it going up. And with the pace and the unpredictability of his announcements and the way that they can move not only the stock market, but the currency markets, it seems as though it's definitely an interesting time to be a Forex trader. That's for sure.
It is for sure. The volatility right now because of the tariffs and the government shutdown is absolutely insane. I mean, every time, like you said, you tweet something or put something out in the news, I mean, it just spikes up or down, whichever way the market movers and the big banks and the ECB and the Federal Reserve move the Euro USD in particular. It's just unreal. So I'm stepping back for the past 2 months now and trying to figure out how the Euro USD moves in that particular time period. Because I trade both on technicals, fundamentals, and I also listen to the news. So I use those in combination to make my decisions for my trading.
Now, how long have you been doing Forex in Switzerland? Because there's been all sorts of things going on currency wise there. You had negative yielding bonds for a long time.
Yeah, even negative mortgages and interest rates for mortgages, it's been crazy. So, I mean, if you look at the euro in particular from a European perspective, it's generally been trying to get to par with the USD. But I think right now, particularly because of the tariffs and the government shutdown, and you've heard the narrative, I think, with the Trump administration that they want to weaken the dollar. So it weakened, I would say, by about 10 to 12% so far when I look at the charts, which is quite aggressive in a short time period. But you are correct. There's a lot going on with the currencies here in Switzerland, with Swiss franc, with the euro for the Eurozone, including the British pound for the cable between the USD and the British pound. So there's a lot of opportunities there for a trader that has the particular skill set and strategies that's just at the sweet spot to take advantage of that opportunity. So I'm trying to find that right balance given the administration right now in the US to see how I can take advantage of that. Because before the US administration, I had it figured out and, I was growing my portfolio. But after that, the volatility has been too intense to really master it. So stepping back and trying to reassess my strategy.
Well, I know Forex can be very lucrative. On a good day, you make piles of money, but you can also get wiped out in a hurry too, because you must be using leverage, right? If you want to make it in Forex.
I am. A lot of Forex brokers will offer anywhere from 1 to 500, 1 to 2,000 leverage. I mean, you'll see some insane numbers out there, but I'm a little bit more pragmatic and I focus on a sweet spot of about 1 to 200 leverage on a portfolio size in about the thousands right now, which I'm trying to grow steadily to even more. But I use the leverage primarily to grow my portfolio as quickly as possible until I reach a cap. Because my brokers and a lot of brokers out there, they have a cap on the number of lots you can buy. With my broker in particular, they cap it at 100 lots. So there's no way I'm going to be a multimillionaire if my strategy works out, but I'll be able to make a decent living out of it. Well, a decent income. So to supplement my employment currently and my other commercial activities. But for people that really want to play the big game in Forex, and I had a discussion with a professional Forex trader here in Switzerland. He used to work in a Forex prop firm. He recommended and suggested to get me in touch with some of the banks in Europe where they'll be able to give you more lots to trade, up to 1,000 or even 2,000 lots per trade, where now you're talking millions of dollars in a single trade. That's kind of where I'm at right now with my strategy and how much I've been trading.
Can you explain what a lot is in Forex?
So a lot in Forex, in the Euro USD context, 100,000 euros. That's one lot. If you're trading at 1 to 200 leverage, which is what I do, if you have a balance of, let's say, 500 euros in your account, you'll be able to trade a maximum of one lot with a 1 to 200 leverage, if you do the arithmetic and so forth. And then if you get to a balance of 1,000 euros, you get to double your lots. So now you have 2 lots and you just keep doubling as your balance doubles, you double your lots to trade the maximum amount of leverage that you're allowed with your broker. But for some time, I was trading with a broker that had a 1 to 1,000 leverage. Huge mistake, super high risk, high stress. Heart rate is just 100 miles an hour when you're in a trade. It's just not sustainable. So I stepped back and I said, okay, where's the sweet spot? Where's an area that I'd be comfortable with? 1 to 200 leverage, a handful of lots, and that's kind of where I'm at right now.
Yeah, because you can make a lot of money with a lot of leverage, but the reverse is also true, right? You can lose a lot.
Yeah. Yeah, and you can lose a lot really fast. And people that get into Forex, they usually want to trade the economic announcements, like the interest rate decisions. So that is, I would say it's a death wish because you get in a trade 5 minutes before the announcement, it could go up or down so fast. And if your stop loss is not in place, you're burnt. You lose your shirt. So I avoid that. I try to find windows and time frames where there are no economic announcements. But now with the tariffs, the government shutdown, the news impacts it as well. Or a tweet. I can't control that. I don't know when it's going to happen. So
I think right now it seems that there is no cycle to it, right? It's not predictable when the news is going to occur because, like you said, it could be a tweet that moves the market. You just don't know.
yes. Yeah, so true.
So, okay, a couple of other things I saw here. You make electronic music?
I do, yeah. I'm on a Mac and I use Logic Pro Studio. I don't do a lot of fancy stuff, but I basically take loops, electronic music loops, and I piece them together to make a song. So I'm soon planning to publish something on SoundCloud. I think next year I'll post that on my website. But yeah, I love electronic music.
Do you head out to the clubs a lot? What's the club scene in Switzerland?
Yeah, for sure. So Europe is a hotspot for that, particularly in Germany. In Switzerland here, we have actually a venue where a friend of mine, she DJs there. So I usually go check out, her DJ session and set. And when she spins, because she's really good at it, I do go check that out. But it's extremely late at night. It starts at 11 p.m. and finishes at 5 a.m. So I don't have the energy for that at my age, but I'm there until probably 2 a.m. and then I come home and I crash.
You spent some time in Berlin, is that right?
Traveled there and worked there, yeah, for my employer.
And Berlin is like the electronic music mecca, right?
It is. It's amazing there. It's an incredible city. And you're right, it is like an electronic hotspot in Mecca. And the food there is amazing. The people are amazing. They're English friendly. It's an amazing town. Yeah, I love visiting there. So many interesting places in Europe to visit, but Berlin is one of my favorites. Yeah.
Well, I have to say, your English is fantastic, but it also says here, parlez-vous français?
Oui, je parle français. Exactement. I studied French at school. Yeah.
German as well?
Just started with German. I'm only A1 level, but I'm doing courses at a local school here and I'm using Speakly on my phone. Plus, I have a few German friends that I practice with. But yeah, slowly getting there.
I've heard German is very, very tough to learn.
But yeah, it is. It's extremely hard. They have the basic grammar concepts like masculine, feminine, and so forth. But one of the hardest things is figuring out the word the, the, because they have it as der, die, das for different types of words. So you have to memorize that. And the other thing that's really hard is a lot of their words, you can't translate them or connect them to English or French, because they're just, it's its own word. So you need to memorize it.
Sure, that's why we've taken so many words like schadenfreude and stuff like that. There's just no equivalent in English.
There's no equivalent.
So what is it that you do for people? You're a certified coach in the United States. Are you still doing any of that?
Yes, I do. So certified coach with the International Coaching Federation, and I offer a coaching service. I do life, career, and business startup coaching. I started about 3 companies in my career. This is my 3rd one that I'm doing in tech. So I had a lot of learnings in my journey in those 3 areas. So I'm kind of slowly starting up that area as another commercial activity I'm doing, but I just don't have a lot of time these days. primarily focus on my employment with my employer, my Forex trading, and my company. But I think next year I'll have more time and bandwidth, hopefully, to take on some coachees.
In Matterhorn Labs, you guys are sort of an incubator. Is that right?
Yeah, incubator. So I've got about 150 plus tech ideas in my backlog, and recently launched one of them in beta called Econocal, which is an economic calendar site that leverages community engagement, including a forum and multiple economic calendars to help people that are in investing and trading to make sound decisions and informed decisions for their trades. Because if you look at economic calendars online, there are many that are free. They're overwhelm you with advertising. And if you look at them individually and try to piece them together, they don't really align. Some of them will give you one number, another will give you another number or a different time window and so forth. So I'm consolidating all of them into a single platform. I have a whole bunch of other ideas.
Well, that would be something that would be beneficial for Forex traders, for example, right? The Econocal, because you're looking at news coming out.
Exactly, yeah. That's exactly what it's for. Because Forex traders and investors, they look at economic events quite proactively to make their investing and trading decisions. So yeah, Matterhorn Labs is one of my new companies I'm starting up, self-funded entirely. I might be looking for investors next year, depending on how things go. We have a very skeleton website right now. Next year, I'll have a more official website. Now your audience is welcome to look at it.
And they can find that at Matterhorn Labs.
Matterhornlabs.ch for Switzerland. Yeah.
And we still haven't asked, what is the last investment you've made?
The last stock investment I made was in NVIDIA. Yeah. That's the most recent one.
It sounds like you're into all basically the Mag 7. Is that right? Like, why did you get into that?
Okay. So, story about that is my wife's friend from high school. She used to work at Goldman Sachs, and she's quite savvy with stock trading and investing. And she actually got into NVIDIA just before it doubled in price and split. So she made quite a good chunk of money, and we had a conversation about it with her. And then my wife and I were thinking, yeah, we should probably get into AI, and chips and so forth. So we're a little bit late to the game, but I think there's a pretty good chance that NVIDIA will be a good long-term investment for the next 5 to 10 years. So we're holding on to that. So that's kind of how we got into it. I think a lot of the times we learn about new opportunities to invest in the stock market through our network more so than reading online at Seeking Alpha or Motley Fool and so forth. And also following, Warren Buffett, because he invested in Apple. He's still invested there. So yeah, that's the latest investment that we're into.
You mentioned before about reading. What books did you read and what ones would you recommend?
Sure. So one of the most interesting books I read, because I'm actually quite into science and physics and quantum mechanics. So Stephen Hawking, huge fan, read his book On a Brief History of Time at least 2 or 3 times already. Great book. I've also read a few books on stock investing and trading. There was one book called The Reminiscences of a Stock Trader, I think. Right. Very popular. Loved that. And another one, what was it called? The Euphoria of Investing. I forgot the author, but it was a short book, and it was primarily about how people get overexcited about investing and trading during bubbles and they burst. And it kind of gives you the history of like tulip mania when everybody was buying tulip bulbs, and then the internet bubble. And he was trying to portray a message about how there's a lot of risk involved in bubbles. And now the AI bubble is another hot topic.
Well, it's interesting because you mentioned NVIDIA, and a lot of people on Twitter, they'll be posting the old charts of Cisco right next to the charts from today for NVIDIA. So you've been a party to both of those. I wonder, what are your feelings around that? Do you think we're in an AI bubble right now?
It's hard to say because I'm not quite sure it's a bubble, because I kind of feel and think that AI is kind of like a genesis of the Google days and the Google search engine, you know? So it's just another way of getting access to information online, a more human-centric and a human-friendly way. So I wouldn't say it's a bubble by itself, but it will impact other companies that are invested in AI. And if we're speaking of a bubble, I think every company that's into AI will have their own little AI bubble. But there will be many survivors, I think. So ChatGPT, OpenAI, for example, definitely will be a survivor. I think Google, Microsoft, NVIDIA, because they're heavily invested into that. And we're still in the very early stages. So I'm not an expert to give you a really professional advice on that, but that's my intuition right now on AI and the whole AI bubbles.
Yeah, the difference between then and now, and I don't want to be the guy saying this time is different, but the difference between something like the Cisco pets.com era and what we saw there versus something like NVIDIA and AI is I think there's real revenues that we're talking about, not just projected revenues or eyeballs and not one company selling another company advertising and then booking those as revenues and stuff that's not actually there, which we saw a lot during the dot-com bubble. And while there are still today big projections, there's also real cash flows behind a lot of these valuations.
No, that's an excellent point. There's definitely value behind everything. So I think the prices of these stocks are valued pretty much correctly. I would say they're not overvalued or undervalued too much, but you are right. That's an excellent point.
Is there anything else you think our listeners should know?
Well, I would say in terms of investing and trading, biggest takeaways for me for the past roughly 2 decades that I've been doing it is when it comes to investing, buy and hold, find something that's reputable, a company you really understand, look at their financials, own their product, use their services, get to know them really well. We're huge Apple fans in this household, so obviously we understand it. So that's why we invest in it in terms of buying and holding. And then when it comes to trading, that's a very complex area. I think Forex and cryptocurrencies is the right space to be for trading. I wouldn't say so much the stock market unless you're doing options. So in terms of Forex trading, I do have a lot of material I publish online through another site that I have that I just started this year that I'm trying to give some context and some educational material on Forex trading. I plan to write a book next year on Forex trading. So that would be my takeaway for your audience. Buy and hold, start as early as possible and save money, squirrel it away. And if you have a little bit of money on the side, you want to risk into trading, look at Forex and cryptocurrencies and options, but definitely be aware of the risks and dangers like I did. I learned through my mistakes.
So do you deal much with cryptocurrencies then?
Only recently. So I actually got in touch with a professional crypto, Bitcoin in particular, trader and investor here in Switzerland. And he gave me the lowdown. And I asked him specifically, look, I'm not looking to trade it, but I do want to invest in crypto. And he said, Bitcoin is due for a correction sometime this year or next. He's been doing this for about 7 or 8 years, and his portfolio is quite impressive. He showed it to me in a Zoom call, and I said, okay, I'll wait. So I'm waiting for the correction, and then I'll probably get into some Bitcoin, with a small investment.
Well, we're recording this October 13th, 2025, and I think we've seen a little bit of a correction there in the price of Bitcoin over the weekend. I don't follow it that much, but I think over the weekend, one of Trump's tweets maybe gave it a bit of a nosedive.
Yeah, it did. So
I think actually the whole crypto market, altcoins and stuff like that, took a pretty substantial dive over this weekend.
Certainly. So I think the timing is right there. I think he's right on the money sometime this year, early next year. So I'm waiting for that dip, and I definitely will get into it.
If people want to get a hold of you, where are you most active? Is it Instagram?
I recently moved to Threads and Instagram, so I'm most active there. I used to be on X, but I'm no longer on X. I didn't get a lot of traction with my social media engagement there, doing better on Threads and Instagram. But if they want to just check out all my social media platforms that I'm on, they can go to my website at patrickrace.com and everything's there, including my articles and so forth. So that would probably be a good starting point. But yeah, Threads and Instagram.
Okay, and on Instagram, it's Reyes_Patrick, RAYES_Patrick, PATRICK.
Yeah, Reyes_Patrick, and Threads, I think, should be the same username.
Well, thank you very much for coming on. It's been an excellent conversation. Hopefully, we'll do this again when your new book and businesses come out.
Yeah, that would be great, Terry. I really enjoyed it. Thank you so much for the opportunity. Once I do publish my Forex trading book, I'll give you a heads up. If you have an interest to do another interview for that, I'd be delighted.
Great. Thanks a lot.
Cool.
A year and 3 days after I bought my 200 shares of CryoCath that I mentioned at the beginning, it had more than doubled in price. I sold 100 shares at $10.50 a share, which gave me back all my original investment plus about $120. And it still left me with 100 shares in the company. Unfortunately, after that, it struggled to find its footing and it didn't quite live up to the expectations earnings-wise. I eventually sold my remaining shares for $2.50 a share in 2006. If you look at that investment as a whole, I returned about 38%, but over 5 years, that's less than a 6% compound annual rate. Had I sold it all after that first year, it would have been over 100% annual return. CryoCath was eventually bought out by Medtronic for $8.75 a share just over 2 years later. If I had held on until then, I would have ended up with about a 10% compound annual growth rate, or CAGR, as some people will say. As I've said before, when you're shopping for bargains, if you're doing it right, you should expect to get buyout offers. Some fact checks and additional info from this episode. We talked at the very beginning about the Iranian Revolution. Iran and Greater Persia has a long and rich history. If you want an easy entry point for kids, you can check out Persepolis by Marianne Satrapi. It's a graphic novel about growing up during the Islamic Revolution. It's a pretty easy read. But if you aren't familiar with the U.S.'s long history of involvement in Iran, there's a ton of good books out there. And really, it's one of the most important geopolitical relationships in terms of its impact on markets in general, but oil markets in particular. If you were alive then, you surely remember the Challenger disaster that Patrick talked about. But for those too young to remember, the Challenger space shuttle broke up in 1986. It killed everyone on board. There were many students in the States watching it live because they were sending a teacher up on the shuttle for the first time. And then during later a hearing on TV, Richard Feynman, who, if you've seen the movie Oppenheimer, he's the guy playing the bongos, but he was also a brilliant thinker and a Nobel Prize winner. He, at these hearings about the Challenger disaster, he famously put a piece of this O-ring, which was the part that failed, in a glass of ice water on TV to show how it lost its elasticity. It was kind of a defining moment, and it's a pretty famous case in safety and engineering circles. We talked about Cisco, and full disclosure here, I do hold shares of it in an account I manage for my mother. But Cisco was at one point in March 2000 the most valuable company in the world with a market cap of over $500 billion. Today, it's down to about $280 billion, so the company's still not worth as much as it was at the height of the dot-com bubble. For contrast, today, a market cap of $500 billion just barely gets you into the top 20 biggest companies. But at the time, it was the biggest in the world. Patrick also talked about making money on HOV. That was a bit of a stock market darling leading up to the great financial crisis. Maybe it should have been a leading indicator in the housing bubble because they're a big real estate play. And if you look at the chart of it, it went from under $100 to a peak of about $1,700 in about 5 years. Then 4 years later, it was under $50. It's a pretty scary chart. You should look it up, HOV in New York. They're still around today. They trade around $130 these days. Patrick talked about the Harry D. Schultz newsletter. That was written by Harry Schultz for about 45 years. It was very popular. It was said that Margaret Thatcher and Richard Nixon were among his readers. He was an advocate of a return to the gold standard. He also wrote a handful of books. I can't recommend any as I haven't read them, but I think it might be something I'm going to want to look into now. A note for my wife and others, when we talk about Forex, which we have talked about a lot on here, we're talking about trading foreign exchange, which is basically buying and selling large amounts of currency, hoping to profit either when a currency goes up or down, or else by borrowing cheaply in one currency and earning higher interest rates in another currency. That's also known as the carry trade. We talked about negative interest rates, and if you live in North America, you probably don't have much experience with this. But Switzerland had negative interest rates for a period of about 7 years. That meant that some banks charged customers for having large amounts on deposit instead of paying them interest. It also meant that a few people had mortgages with balances that decreased more than the payments they made. So instead of the bank charging you interest on your mortgage, they actually paid you to borrow money in a sense. The last country to have negative interest rates was Japan, but that ended last year. So right now there are no negative interest rates out there as far as central bank policy. In addition to A Brief History of Time, Patrick also talked about 2 investment books that he couldn't quite remember the name of. And I'm pretty sure he was talking about A Short History of Financial Euphoria, which is, of course, by the great Canadian economist John Kenneth Galbraith. And there's a beautiful little library named after him in Dutton, Ontario. If you're ever in the area, it's worth a stop in. Pull off the 401. The other book Patrick mentions is Reminiscences of a Stock Operator by Edwin Lefebvre. It is widely considered to be about Jesse Livermore, who was a famous Wall Street trader. And it's probably one of the most recommended books about the stock market. You'll hear about it time and time again. Please remember that the information on Terry Hogan Talks Stocks is for entertainment and educational purposes only. It is not investment advice. Please do your own due diligence, and you should probably just buy the index anyway. The opinions of the guests do not necessarily reflect the opinions of the host. If you like what you hear on the show, please do all the things you should do, like follow, rate, and tell a friend about us. If you have questions or you'd like to be a guest on Terry Hogan Talks Stocks and tell us about your first, your worst, your best, and your last investment, you can find me on X at Terry M. Hogan, or you can send me an email at terrymhogan@gmail.com. Since it was one of the books our guest talked about, we'll leave you with a quote from Edwin Lefebvre from Reminiscences of a Stock Operator. It never was my thinking that made the big money for me. It was always my sitting. Got that? My sitting tight. Men who can both be right and sit tight are uncommon.